Hey, this is Green Knight Trading. Welcome to my channel. Today I want to go over my gains and loss report on my TD Ameritrade account. I originally started this channel to talk about options. I want to be as transparent as possible, and I will walk you through all of the trades I made this year. And this isn't going to be super organized, but hopefully you can learn something. So let's go over these numbers. Overall, you can see this is the most important number, the short-term net. I don't really have any long-term gains just because I'm not selling any of my stock. There's a small fraction of these gains that were made from short-term sales, but at max it's about $1,500 or $2,000 just because I'm not a day trader. I don't like to buy and sell stock. I like to buy and hold for long periods of time, which means that I am actually selling a lot of these options on using my stock as collateral. So it's not technically on margin, but if my account were to drop below a certain amount, then they would be forced to sell some stock to pay out. Majority of this is all from options trading. So you can see that gain, I made actually 40K, but I actually took a huge $13,000 drawdown, and this was all mainly from Tesla. I'll link a couple of my past videos before, but we'll go over that. This is all the proceeds, meaning this is what I sold the options contracts for, but ultimately I would close them out early. So you can see that the cost of closing them out was about $148,000, and that gives us roughly this short-term net of $26,000. The long-term net is regarding some of one of my stocks. I believe it was ET, which is an MLP, and the stock structure is different. But let's dive into the individual securities. I believe this order is just an alphabetical order, so it's not by date. I'll make sure to explain everything as we go along. I started trading right around mid-August, but I really started trading with more capital around the beginning of September. Overall, I would say the amount of capital I used ranged from 100,000 all the way up to 400,000. So I'm going to put the title probably as all my gains trading on a $250,000 account. But I've only been trading essentially for 4.5 months, almost full time essentially. I have a couple of other businesses and gigs I'm running, but during this whole pandemic situation, I've had a lot of more time to dive into this way of making money. So yeah, back to these securities. So here, these AMDs, these were actually just day trades, meaning initially when I started, I thought I would be an actual day trader, buying and selling securities the day of. And you can see my proceeds might have seemed high, but this column is what actually matters. Proceeds are just what I buy and sell it for. This is actually my net gain or my profit. You can see I made 35 bucks here, which was awesome, but very quickly I was just breaking even, and not much action here. AQB calls, I lost some money. This was a penny stock. The reason I lost money was because, yeah, I sold a call and then AQB shot up, so I wanted to keep my shares, so I bought and closed it. Covered calls have actually been the scariest part for me this year, especially because it's a bull market. Most of my puts have been great. I profit on over 90% of them. It's the calls I'm unwilling to let go of my shares, reminding me and you that maybe you shouldn't even sell calls in the first place if you are holding a stock that you're very bullish on. And AQB was definitely one of those stocks. And luckily I did buy these calls back because AQB has more than doubled since I bought them. So I'm glad I closed these positions out. This is an ARC Innovation. I had 5 shares. I just bought it and held and I sold it, not really for profit, but I actually do have more ARC in my Roth. So here we have BABA, and these are puts. And these puts I made good money on. So you can see here, proceed was 523. This I took profit way early, like around 20%, but the movement of BABA was pretty erratic and there was a lot of news coming out, so I got scared. But here's where I followed my strategy exactly. Here you can see that I sold it for 282 and I bought it back for exactly 140. This is the key to my success. The fact that I'm profitable at all this year is actually a pretty big anomaly. A majority of traders break even or lose money. So I do think there's something to be learned here. Luckily for me, I found a really good strategy that has been back tested, and I just trusted them. I don't think I'm that smart, but I can recognize who's smarter than me, and I'm okay to just copy them. And that's what I did with a certain tasty trade strategy. I saw what they're doing, I saw the research, it made sense to me, and I essentially just copied it. And it's a theta gang strategy, meaning a majority of my positions, I just sell puts or I sell calls really out of the money, and I collect the premiums and I let theta decay do its work. I am right over 90% of the time, But of course, there are downsides, but we'll get into that. A key to the strategy is taking profit at 50%. So you can see here that even though I opened it at November 9th and the expiration date was December 24th, about expiration date, that's 45 days out, I was actually able to close it in just 15 days. So less than half the time had elapsed and I got 50%, a little bit more than 50% of my profit. That's the power of closing your positions early. That means I would get this collateral back, which would be about $24,000, and I could put it into a new trade. So we have a BAC, this I lost money on, which is okay. And then here we have a couple of CRISPR plays, which were also puts, and both I profited very, very well. CRISPR has been shooting up. So you can see that I opened these positions, let's say December 7th, and I closed this one just 14 days later. 2 weeks later, I closed them out for more than 50% profit. Actually, this was more than 50%. This a little bit less than 50%, but that's totally okay. And also note, CRISPR and BABA are stocks that I personally wouldn't mind owning. So if the worst situation, and I put quotes around the worst, if they were to really drop super low and touch put end of what I sold, I'd be okay of getting exercised and forced to buy 100 shares of this stock. That's okay. And I have money to cover that. So here, this is where I had a lot of ET from earlier in the year, and this is an energy MLP. It had really high dividends, but they cut their dividends. So ultimately, this is just the sale of that stock. I didn't really lose much or gain much. I had a little bit of capital gain, but as you can see here, not much. So here it says assign just because I sold calls on it because I knew I wanted to sell it. So I might as well collect the premium while also being able to sell the stock. So here I got a little bit more premium. But moving on, here it was a lot of ET plays. I was holding a lot of ET for a while. I made some calls and puts just to kind of slowly diminish my position, but ultimately I was trying to get out. So we'll just go past that. There's a lot of ET stuff. Here we have First Solar. It's a solar company. Didn't get in at the right time. Bad play. GM, I believe this was a day trade. Didn't get in. Well, I didn't know anything at this time. This was August 17th, one of the first trades I ever made. And very quickly I realized how hard day trading actually was versus my current strategy, which gives me so much more time and it's so much less stressful. When you're looking at weeks or months, it's just a lot easier. Okay, here we have Hyliion. This I opened at, these are just sales. These weren't options. I wasn't playing with the options then. Tiny amount of profit. I think I was holding for a while and I just needed capital somewhere else. So I just sold. Here we have puts, and this was all in October and November. And you could see here I'm selling puts on Hyliion. And they were all profitable because during this time, Hyliion was experiencing a really great run. So you can look here, I closed profit. This, I don't know what happened, but here 65, 50% profit, 73, a little bit more than 50% profit, 84, which is basically 50% profit, 186, which is like 55% profit. You can see the pattern. I'm sticking to this pretty well. Here we have INTC, which is Intel, day trading. So day trading, I'm losing money. Day trading is hard. Here we have a Lemonade play. Lemonade is an insurance company via an app. It's a lot more streamlined than older legacy insurance companies. And this is a stock I am bullish on, so I'm totally okay selling puts on it. And you can see here, I sold a put for $480. I took profit at about $239, which is that a 50%? Yeah, just a little bit under 50%, which is totally okay. Sold some Microsoft stock at price, didn't make any money. Neo is really interesting because Neo, I sold a covered call on, and I also made a video about it. It really hurt me. And Neo shot up after I sold that call. So it was something like I sold a call at, let's say, $12 or $13, and Neo shot up to $20. So ever since that, it left a chip on my shoulder. I wanted to get back into Neo. I felt mad about losing the stock to that covered call. And here is when I started chasing Neo, meaning it would go up, I would sell a put, I would close out the put, it would go up more, I would sell another put. And honestly, if I had just held on to the stock, let's say since it was $13, I probably would have had the same amount of capital appreciation as I did regarding the income. But because I was chasing it, I got a lot of money because it just kept going up. So here I closed this put at almost 100%. Here it was all 50%, 50%, 80%, 80%, 50%, 90%. I just made all this cash, ultimately lowering my cost basis, which is good, but I'm going to need to pay taxes on all that. Here, I lost a little bit of money. It wasn't all smooth sailing, but as you can see, the rest of Neo, I just made a lot of money chasing it, basically. Now I have my 100 shares of Neo. I finally caught it, and this is the journey it took. Probably made $1,500 or something. Here is a Nano Dimension, a couple of puts here. Nanox, I made a pretty penny from. Nanox was a stock I was turned to from Dead Inside, and yeah, I got into it fairly early, and then I wanted to get into it more. The volatility was crazy high. Look at this, a $1,000 premium, and I don't actually remember what the delta was. It was also probably more aggressive than usual just because this was a more riskier play, and this was with my play money. This might have been a 30 or 25 delta, and I usually just do 5 or 10 deltas. So yeah, this was a great fat premium. Here we have Palantir, and I was trying to get into Palantir. I actually bought some stock fairly early, just at IPO around 10 bucks, but then later I did more due diligence and I realized I wanted more. So the moment I want more of a stock, I just start selling puts. And you can see same thing that happened with Neo happened here. I'm just chasing it. It keeps going up. I'm collecting the 50% premium. Here is where that actually bit me in the butt, because right here, I believe, oh yeah, these are calls. See, once again, calls are what's going to get you. I sold some calls. Palantir kept shooting up. I didn't want to lose the shares I had, so I closed out these calls at a loss. Actually, had I waited, maybe this would have been okay. But personally, I don't want my shares called away. This is just my own risk tolerance and what I like to do. Once I get past, there are certain stocks that just, I know they have a chance of running away from me, so I'm just going to close it out for a couple $100 if I made the wrong decision, which I did here. And I continued to collect nice premium from it, and you can see it's always about 50%. Majority of the time, I'm taking profit at 50%. Here we have Riot. It's a blockchain mining related company. I had some money. Spirit Airlines I made some money on, and this I just bought at the dip, and it's like a small little swing trade. SPY, this was from my day trading days. I thought I was a god here. I was like, oh, I'm doing this for the first time, and it's so easy to make money, $34, $30. But then it just required too much attention, and yeah, it was easy to make money, but it was also very easy to lose money. And finally here we get to the bulk of my trades, the bulk of my gains, the bulk of my losses, the bulk of my euphoria, the bulk of my greatest pain, Tesla. I've been bullish on Tesla for quite a while. I was a lot more bullish after August, after I learned more about the company. But as you can see here, I started selling puts in October, in October I started aggressively selling puts on it because I finally understood its true potential. And this is when my options trading hit that next level. I started making a lot more money because Tesla had pretty high volatility, meaning it had high premiums, but I could really stretch out these strike prices. I felt safe, and these were really consistent, good money. Tesla also had really nice fluctuations, meaning if I was doing strangles, if I was selling at the put and selling on the call end, there were days where I could put a position, it would swing up, and I could close my put, sell a call position. It would swing back down. I would open another put, and then I would sell the call position. And I was closing positions that were 45 days till expiration within 8 days. In less than 25 or 20% of my full day till expiration, I was able to close at 50% profit. And that's why this strategy is also so amazing. If I'm closing these positions so early, I get all of this collateral back, $33,000, $58,000 back to open new positions. And instead of waiting till all the way to the end, till it expires to collect the full premium, you could do so many more plays and ultimately make so much more money with a lot less risk, because the earlier you're closing your positions, you're also mitigating risk. So here you can see opening these, closing these, opening these, closing these. Here I opened it on October 29th. I closed it in 1 day. I opened it on October 26th, closed it in 4 days. 27th, closed it in 3 days. 26th, closed it in 4 days. These were the golden times, and I was getting super, super cocky. I thought, man, this is so easy. Like, what could go wrong? Why is this so easy? Here it started getting, this is probably more normal, but this really ruined me because I thought I could do this forever. Here it started getting to 14 days, and I was like, what is this? Why is it taking me so long to make money? Yeah, don't get greedy. You'll see I pay for that later. I'm just pumping out, puts and calls, or selling puts and calls, selling puts and calls, all the way up till, right about here, 11:18, when Tesla was announced that it was going to join the S&P 500. I thought it would go up, but I was being pretty sloppy here. I wasn't really looking at implied volatility that much. I wasn't grabbing the best peaks or the troughs for my puts and calls. And I just sold on a green day, but I should have waited. And these really, really hurt. This I sold a call on, and my cost basis for Tesla is very, very low. I think it's in the hundreds, or it ranges from less than 100 to 200. If I was forced to sell these at like $61,000 or $62,000 for 100 shares, I would be paying probably $10,000 in tax. And I don't want to do that. I'd rather just hold forever. So when Tesla shot up, the covered calls I sold started getting tested. I knew I would be forced to sell my Tesla shares if they hit my strike prices. So I made the executive decision to close this position out. But I was an idiot. I had multiple covered calls. I had no idea. I wasn't really thinking that Tesla could shoot up that much. And in my defense, I don't think anybody did. But ultimately, this is what happened. I spent $1,000 here, $1,400 here, $4,000 to close this call. Yeah, this hurt. And remember like how much money I was making consistently. And luckily, I still made more money to cover this loss. But think about it. I was making, let's say, $200, $250 per trade. And here I had a $4,000 loss. 15 trades of work gone in one bad trade. In total, my Tesla issues cost me about, I think, $11,000. It was 4 calls that I had to close. And that really hurt. I got smarter. I realized, okay, Tesla is going up. And to mitigate that, I did make a smart play. I started selling more aggressive puts. So here I increased my delta a lot. And actually this was pretty risky, but I was also very, very bullish on Tesla at this point. So this was a risk I was okay with. If I really had to buy 100 shares, if the price dropped back down, I was ready for that. It would hurt. It would be really annoying. I would need to readjust my positions, but I was ready for that. So because of my very aggressive puts, I got these huge premiums back. I sold very close to the money puts, more than I'm used to. I think it was at like between 10 to 30 delta. No, sorry, between 30 and 50 deltas I was selling puts now. So even as the price was going up and my calls were getting more and more expensive to close, at least I was making money on the put side. So I had a couple of these that helped mitigated my bad calls. So yeah, here a lot of money I made back, $1,700. This was a $5,400 put sale. This was deep in the money, actually, or not deep. It was in the money, and I sold it because Tesla kept going up. So this definitely helped mitigate that. Otherwise, all my small gains would not have been able to overcome these huge losses. Now that I'm saying it out loud, I did really get lucky. I think I got unlucky initially, and then I got very lucky. So props to Lady Luck. Thank you. Here we have more calls, and that was like the most traumatic, or the bulk of it here. I mean, again, this wasn't an order. These are a lot of my November calls and puts. You could see my strategy working again, selling it for this amount, taking profit at 50%. Here was another loss. This was one of the calls I was telling you about. Here, once we were getting closer to the actual S&P inclusion date, I had high conviction that the price was still going to be pretty high, so I was still selling puts pretty close to the current price, and I made a lot of nice premiums here. Here I didn't learn my lesson. I still sold some calls because it had run up so much. I was like, there's no way it could run up even more, and it did. And I ended up losing more money on covered calls, but this time not nearly as much. The moment my call side was tested, I was like, okay, I'm out. I've learned my lesson for real. I think, hopefully. A couple more Tesla plays. These are my consistent money makers. This was good. Another really nice Tesla put play. A lot of money, actually. So this is all from October. You can kind of see why I got so cocky, right? Like, look at this run right here. This run, and add it to the previous run. It's so consistent, 50%. I never lost. I still, even including those Tesla calls, I still have probably over a 90% win rate. So it seems so easy, and I think it's because I am following a very time-tested strategy that actually I think is one of the best strategies. But just reading Reddit and the onlines like people don't know about, or they think they can reinvent the wheel. But this is a strategy that works, and I highly recommend it. And maybe I'll make a video diving more deeply into how exactly it works, but it's actually pretty simple. But whenever somebody asks me that, I always tell them essentially the same thing: is go watch Tasty Trades, go watch that strategy video. Here we have some workhorse plays, which are all right. Zora plays, nothing too exciting. ZUO is it's a software as a service company where they help you make your company subscription based. And this is a company I'm pretty bullish on. So I own some shares, I sold some calls, and I also sold some puts. But yeah, okay, that was it. I know that's pretty long and rambly. I hope you had value from that. Overall, you can see my adjusted proceeds, $181,000 worth of calls and puts I sold. And then buying them back cost me $154,000. That might seem like really big numbers, but ultimately my net profit has been $26,000 over about 4.5 months of work, which I am super duper happy about. I am just grateful that I'm up. Again, results are not typical. This is a very bullish market, so I think this is also one of the reasons why this worked so well, especially I profited a lot on the put end. It's about selecting the right companies, not being greedy, controlling my position sizes, definitely a little bit of luck. If I can do this in 4.5 months with the amount of experience I have, I think next year I could be on track of actually making a full-time income just doing this. And now I've actually already learned so much more than I did when I started. And this is just on my TD Ameritrade. On my Robinhood, actually, I've made a little over $10,000 in cash. So my profits this year have been about $36,000, which is pretty sweet. Of course, my account size is pretty big too, but I wouldn't want to put more of it at risk. I think this is a good amount. I might be a little bit more aggressive, but the only reason I would be more aggressive is if I've done more research and I have even more conviction on a certain play or stock. But yeah, that's it. Let me know how you guys have done this year and what strategies have worked for you. If you have any questions, I will try my best to answer them. Please remember, I'm not a financial professional. I'm just a guy sharing my experiences, and hopefully you can learn from my mistakes and my wins. This is Green Knight Trading, where scribes become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.